This video will explain some of the proposals for the first exposure draft of International Non-Profit Accounting Guidance, or INPAG for short. It will provide an overview of the most important aspects of the presentation of financial statements. Financial statements are important as they communicate information to a broad range of stakeholders about the finances of a non-profit organization, or NPO. The four primary financial statements are: the Statement of Financial Position, the Statement of Income and Expenses, the Statement of Changes in Net Assets, and the Statement of Cash Flows. INPAG has a section devoted to each of these four primary statements, as well as sections that provide additional guidance relating to financial statements more generally. This video covers sections 3, 4, 5, 6 and 7. No NPO-specific issues have been identified for Section 8, Notes to the Financial Statements, or Section 10, Consolidated and Separate Financial Statements. These sections are not discussed further in this video, but please let us know if there are any NPO-specific issues that we have missed. The overall approach to developing INPAG is to use the IFRS for SMEs accounting standard as a start point, and to only make changes where these are required to address NPO-specific issues. This approach has been taken with the financial statements. The IFRS for SMEs accounting standard is designed for use by commercial enterprises. NPOs, and the users of NPOs' financial statements, have different needs. The INPAG financial statements have therefore been tailored for this context. Firstly, NPOs may receive grants or donations that can only be used for a specific purpose. These grants and donations can have restrictions associated with their use. INPAG proposes to report funds with restrictions separately from funds without restrictions. Secondly, INPAG proposes a statement of income and expenses that is intended to be more focused on the operating activities of an NPO. Non-operational items that are proposed to be excluded from the statement of income and expenses will be relocated to an expanded statement of changes in net assets. INPAG proposes that comparative figures are provided for all amounts presented. We are seeking views as to whether this will aid transparency by providing useful information, or hinder it by overloading users of the financial statements with too many columns. This is an important question for stakeholders to consider. INPAG also includes a statement of financial position and a statement of cash flows. These broadly follow the requirements of other frameworks. However, some additional disclosures are required because of the need to report funds with restrictions and funds without restrictions separately. We will look at each of these proposals in more detail. This slide illustrates what these proposals mean in practice for the statement of income and expenses. Starting with a simplified statement for an NPO, showing only a single financial year, this is the presentational format that might be seen under the IFRS for SMEs accounting standard, except that the difference between income and expenses generates a surplus or deficit, rather than a profit or loss. INPAG proposes the addition of two extra columns, one for funds with restrictions and one for funds without restrictions. Providing this information will help the users of the financial statements to understand how much of the NPO's funds are committed for specific purposes. Separating income and expenses into two additional columns may require more work for NPOs. However, many NPOs that receive grants and donations with restrictions will already be recording these transactions separately, as this is often necessary to demonstrate accountability and compliance with the terms of the funding agreement. It is therefore presumed that the additional work should be limited. It is necessary to balance the need for transparency and measures to minimize complexity. As just outlined, to aid transparency, the statement of income and expenses requires additional columns for funds with restrictions and funds without restrictions. A similar split is required in the statement of changes in net assets. To minimize complexity, INPAG does not require the equivalent split in other statements. To aid transparency, the statement of financial position requires net assets to show the split between fund balances with restrictions and fund balances without restrictions. However, to minimize complexity, INPAG does not require an equivalent split for each line of assets and liabilities. Under INPAG, NPOs will present a statement of income and expenses. This replaces the statement of financial performance in the IFRS for SMEs accounting standard. This change has been made because in our discussions with stakeholders, it was frequently stated that the most important figures for users of NPO's financial statements are an NPO's income, its expenses, and its surplus or deficit. Other figures such as the gains or losses on the revaluation of some assets are seen as less important. As a result, the statement of income and expenses has been designed to focus on the figures that are understood to matter most to users. The following slides illustrate these two statements. As mentioned earlier, the statement of income and expenses has separate columns for items with restrictions and items without restrictions. There are three main sections to the statement. The first two sections are income and expenses, which net off to calculate the surplus or deficit from operating activities. Typically, the income section will be presented first, although INPAG allows NPOs to present expenses before income, if this will be more useful to the users of their financial statements. The third section covers gains and losses that are not in income or expenses, but are included in the overall surplus or deficit. INPAG uses the term surplus or deficit because of feedback that this is better than the term profit or loss when describing an NPO's operations. Unlike the IFRS for SMEs accounting standard, the statement stops at surplus or deficit, which is one of the figures that stakeholders indicated is most important to users of an NPO's financial statements. As noted earlier, items which would be included within other comprehensive income under the IFRS for SMEs accounting standard have been relocated to the statement of changes in net assets. For the income section, INPAG proposes separate lines for general grants and donations of non-current assets. The line for grants and donations of non-current assets would include donations of an asset or cash that is required to be spent on acquiring the non-current asset. Separate lines are also proposed for other types of income, for example, income from the sale of goods and services, and interest income. The detailed requirements for income recognition are not covered in Exposure Draft 1, but will be addressed in Exposure Draft 2. Consequently, it is possible that there will be some changes to the disclosure of income when this work has been finalized. The expenses section will provide an analysis of an NPO's main expenses. The proposals for this analysis are being developed for Exposure Draft 3. Separate lines will also be required for finance costs, but the detailed requirements for other types of expenses will depend on which analysis is selected for inclusion in INPAG. The income and expenses sections net off to show the surplus or deficit from operating activities, that is to say, the day-to-day operations of the NPO. The final section of the statement of income and expenses shows gains and losses that are required to be included in surplus or deficit, but which are not part of the day-to-day operations of the NPO. Most of the gains or losses presented under this section arise from sections of the IFRS for SMEs accounting standard that are being incorporated into INPAG without any amendment in this stage of the INPAG development. It is possible that a different treatment of some of these gains or losses may be required at a future date. Examples of these fair value gains and losses include those relating to defined benefit plans, financial instruments, and investment property, along with the NPO's share of these gains and losses made by an associate or jointly controlled entity. For the statement of changes in net assets, INPAG requires funds with restrictions and funds without restrictions to be presented separately. For some NPOs, additional columns may be required if an NPO has equity, or where an NPO has non-controlling interests in other entities. Neither of these situations is expected to be common for NPOs, and so most NPOs will not need to present these columns. This statement differs from its equivalent in the IFRS for SMEs accounting standard. This is because the statement of changes in net assets includes items that, under the IFRS for SMEs accounting standard, would have been part of other comprehensive income, and so in a different financial statement. The starting point for the statement of changes in net assets is the surplus or deficit figure that comes from the statement of income and expenses. This is already split between the surplus or deficit on funds, with and without restrictions. For NPOs that do not have equity or non-controlling interests, nothing more will be needed, other than the figures in the statement of income and expenses. The effect of changes in accounting policies, or the correction of errors, must be shown in the statement of changes in net assets. This will show the changes that affect the balances for prior periods. For example, if an NPO changed its accounting policy on depreciation on a particular class of assets, the new depreciation charge would be included in surplus or deficit for the current reporting period. But changes in accounting policies are retrospective. Prior reporting periods are adjusted to show the figures as if that policy had always applied. It is these changes to previous periods that are reported as an effect of changes in accounting policies, or the correction of errors, in the statement of changes in net assets. As already noted, some gains and losses are not recognized in the surplus or deficit, but are instead recognized directly in net assets. Many NPOs will not have these gains or losses, so their significance will depend on an individual NPO's circumstances. The unrealized gains or losses that are recognized directly in net assets are as follows. Foreign operations. These are gains or losses that arise where an NPO controls a foreign operation and translates the financial statements of that foreign operation into its currency for the purposes of consolidation. Employee benefits. Some employee benefits involve the recognition of unrealized gains and losses, based on the actuarial valuations of assets and liabilities. This occurs mostly when the NPO has a defined benefit pension scheme, which is becoming much less common. Hedging. Hedging arrangements are measured at fair value, which can lead to unrealized gains or losses arising. It is possible that some NPOs undertake hedging arrangements. Property valuation. Where an NPO measures its property, plant and equipment at fair value rather than historic cost, unrealized gains or losses can arise if the valuation of the assets fluctuate. These gains or losses are recognized in a revaluation reserve. Where an NPO does not have any of these types of unrealized gains and losses, this section of the statement can be omitted. INPAG requires a subtotal of the surplus or deficit, the effect of accounting policy changes or errors, and unrealized gains and losses. This is called total income, and is equivalent to total comprehensive income in the IFRS for SMEs accounting standard. Below total income, NPOs will need to report transfers that are made between funds with restrictions and funds without restrictions. For example, a transfer between funds may be made if the NPO has satisfied all the terms of the funding arrangement, and that arrangement allows the NPO to retain any unspent funds for its own use. Details of the transfers should be provided. Finally, for the limited number of NPOs that have equity, any movements in equity, for example, the nominal value of shares issued to founding members, should be presented as a separate line. As we have seen, INPAG requires additional columns to provide information about items with and without restrictions. This results in 3 columns for the current year's statement of income and expenses. Consistent with the requirements of other international financial reporting standards, INPAG requires comparative figures to be presented for all of these amounts. Some stakeholders are concerned that this will be too complex for many users of the financial statements. We are therefore seeking views on what comparative information should be included. For example, should comparative figures be presented in the primary financial statements, and also in the notes to the statements? Or should full comparative figures be included in the notes only, with the comparative information in the statements limited to total figures? Or should the comparative information be limited to totals only, in both the financial statements and the notes? This is an area that will be reviewed as other sections of INPAG are developed, as well as in response to feedback on this issue. The statement of financial position specified by INPAG follows a traditional balance sheet format. The analysis of net assets must be split between the aggregate balance of funds with restrictions and the aggregate balance of funds without restrictions. If an NPO has equity and/or non-controlling interests, these will need to be shown separately. Assets and liabilities are shown as either current or non-current. Where this split is based on the operating cycle of the NPO, there is a rebuttable presumption that the operating cycle is 12 months. This means that less than 12 months is current, and over 12 months is non-current. INPAG also allows a liquidity-based presentation, where this is more appropriate. Moving to the statement of cash flows, INPAG allows the operating activities section to be prepared using either the direct or indirect method. This is consistent with the permissions in international accounting standards. INPAG includes proposals for the disclosure of additional information. This is in relation to donations and grants, and in particular, any donations of property, plant and equipment, or grants or donations to purchase property, plant and equipment. This video explained the main proposals relating to the presentation of financial statements. In summary, we have described the primary financial statements in INPAG, including the scope of each statement. Explained the requirements for the presentation of funds with restrictions and funds without restrictions in each of the financial statements. And described the proposals for comparatives on the financial statements. The INPAG implementation guidance provides illustrative financial statements. To respond, visit www.ifr4npo.org/have-your-say. Download a template response document and upload your completed response or comment letter. Responses must be in English. The deadline is the 31st of March 2023.